Hello and welcome to Just Jackie for August. All right, let's dive straight into what's been happening in the finance world this month. First up, what's the RBA been up to? Well, the latest CPI figures are in and are looking good. And as expected, the RBA has cut the cash rate to 3.60% at their August 12 meeting. That's the third cut this year, a welcome little bonus for borrowers across the country. After that, we're expecting a bit of a pause. Home loan interest rates will likely settle into that mid-range, hovering somewhere in the high 4s to low 5s for a while. Now on to lender rates. Fixed interest rates are looking pretty competitive right now. For owner-occupiers, Teachers Bank is offering a 2 to 3 year fixed rate at 5.10% P&I, and Bendigo Bank has a 5-year fixed at 5.49%. If you prefer variable, Kudos is sitting at 5.44% and Heritage at 5.49%. For investors, Bank of Queensland has a 2 to 3 year fixed interest only rate at 5.34%, while Teachers is offering a 5.35% for P&I. On the variable side, MyState is at 5.74% interest only, and Kudos is offering a principal and interest rate at 5.64%. We were chatting to ING last week and they have two great policies to look at. The first is common debt reduction. This policy is a game changer for people with multiple borrowing arrangements. Essentially, it lets you isolate your expenses and borrowing costs from your co-borrowers or spouse. For example, if a husband buys an investment property in his name only, most lenders will make him prove that he can afford not just the new investment, but also the entire household cost. And they won't take his wife's income into account. ING takes a more flexible approach, allowing him to show he can cover the investment and only 50% of household expenses, meaning he can potentially borrow more and benefit from better investment gearing. The second is Family Pledge, a great option for parents who want to help their kids get into the property market. By using the equity in their own home as security, parents can help their children borrow up to 100% of a property's value and avoid expensive lender's mortgage insurance. It's not for everyone, but with the right checks and balances, it can make a huge difference for first home buyers who don't qualify for other grants. Now let's zoom out and talk property. Australia's market is tipped to keep growing over the next year, with Sydney and Melbourne leading the charge. They're usually the quickest to respond to interest rate cuts. Adelaide and Perth, which have been the stars of the show lately, will still see growth, but just at a slower rate as affordability becomes a challenge. If you're looking to buy, now is a great time to speak to your broker and even connect with a trusted buyer's agent for tailored advice, which we can definitely help you with. So make sure you click the link to book in an appointment with a broker. Now to wrap this up, if you've loved working with Lydian in the past, we'd be grateful if you could spread the word. Referrals are the biggest compliment we can receive, and we love helping friends and family of our clients get the right finance solution for their needs. That's everything from me. Thank you so much for watching this episode of Just Jackie. Have a brilliant end to your month, and I'll see you in September.